Hey folks, welcome back to the Edupedia world, and I am Abhinay Gupta. And today again we are continuing with the Professional Ethics by the Chartered Accountant Act 1949. Right? So we have covered more than 80% of the part 1 of the first schedule, right? And now we are in the third last clause, which is the clause number 10. After this, we have just 11 and 12 to go in this part. And with the completion of this part, right, we are very close to the completion of the entire first schedule. Because the part 2, 3 and 4 is just a cakewalk. And I don't think I'll be taking more than 2 to 3 lectures to complete all those 3 parts. Right? So today we are heading towards the clause number 10. So when we start a clause, right, what is the first thing we refer to? Which is the direct context of the clause. So let us read the context of the clause and try and interpret what it means to say. Right? Even clause 10 is not a big clause. I'll try winding up the entire clause in this lecture itself. Okay with that? Right. So the clause number 10 goes on to say, a chartered accountant in practice is deemed to be guilty of professional misconduct if he charges or offers to charge, or accepts or offers to accept, in respect of any professional employment, fees which are based on percentage of profit, or which are contingent upon the findings or the results of such employment, except as permitted under any regulation made under this Act. So this is the broad context of this clause. Right? So what did you understand? If you look at the nutshell of this clause, then the basic crux that it goes on to say, or it goes on to deliver, is that when you are charging a fee for your professional work, please fix it at the time of your engagement. Right? It should not be dependent on the occurring or not occurring of any future event. That is in totality what it wants to say, right? Because if you look at it, it says that you are guilty of professional misconduct if you charge or offer to charge, accept or offer to accept, in respect of any professional employment, fees which are based on percentage of profit. Right? You say, okay, you want me to perform a statutory audit for you and to deliver a report on that. I'll do it. So the other person asks, okay, so what is the fees that you will be charging? I don't define my fees, It depends on the kind of company you are. Because the bigger the company, more the work, higher the fee. So how do you define the bigger the huge work in the company? So it depends upon your turnover, right? So whatever you earn the profit, I'll just take 2% of it. And then the client's jaw drops. What? Out of the turnover, we make a profit of 5% and you want 2% of it. No, I don't want the 2% of your turnover, 2% of your profit. Okay, that means the entire year we slog. And then you take 2% of profit. Now, actually, that is not the concern. The basic concern is, why percentage of profit? Because if I am an auditor, right, and I know that my fees will be depending upon the percentage of profit, and the first thing that clicks my mind is that higher the profit, higher is my fee. Right? So my audit will also be biased. If I see that there is a chance of reducing the profit of the company or increasing the expense, reducing the income, increasing the liabilities, anything, I will try and skip that. Why? Because if there is 1 CR expense that I skip, that the client has skipped, and I don't get into it because I know it is just an overstatement and we'll just go through it without showing those expenses. Right? I may think of doing so. Why? Because if I skip an expense of 1 CR, the result is an increase in profit by 1 CR. And that results in increase in my professional fee by 2 lakh rupees. Right? So where is my integrity? Where is my credibility? Where is the respect and the independence that I have? Nowhere. It's gone for a toss, right? It's compromised over here. Even if it is not compromised, like I do everything ethically and then I say no, I charge fees of profit and everything will be a true picture, who is gonna believe? Who's gonna believe it? Nobody. So what is the point? When you go for a client, you'll ask him, what is the estimate? What have you done this year? He'll say, yeah, this is the work we have done. This is the estimated profit that we have as per our accounts. And this is what it happens and everything. So if you know you want, even if it is your funda that, yeah, I'll be charging 2% of fees because that will define the workload. So just tell him, okay, this is an estimated thing. So my fees will be this much. Why? This is my operating expense. This is my out-of-pocket expenses. This is my fees and this is my this. You just break it down and give it to him. That is on you, right? What fees you're charging. But don't make it depend on the profit of the client, because that will make it look biased. What is the reality behind? Nobody knows. But on the face of it, it looks biased. Right? And since we need to protect the dignity of our profession, so the clause 10 comes into play. It says, I don't want to leave any scope where somebody can point a finger on the profession. Where somebody can just come up and say that, yeah, this chartered accountant is very unethical. Right? And that is wrong. So to protect the dignity of the profession, to protect the independence, it's a shield, the professional ethics. So it says you will not ever charge any fees based on the percentage of profits. Right? And then the statement again goes on to say, or which are contingent upon the findings or the result of such employment. Now, what is the finding? I go on a client, I audit, I say, if I find out 5 mistakes in your accounts, right, I'll be charging you 1 lakh rupee per mistake. And that mistake, I'm telling you, can even be a clerical error. So he says, okay, if it's 1 lakh rupee per mistake, go on. And what you do is you just go on finding mistakes. Okay, if I find this mistake, if I find this mistake, I find this mistake, I'll charge you this. That is a finding, right? Or maybe the client is stuck somewhere and client wants your help in it. If I find the solution, I'll charge you for that. Now, what kind of a work it is? For example, if you don't find anything and everything goes very well, very good, perfectly fine with the client, you don't take a fee, you don't take a penny and you issue a report, is that it? The answer is no. Right, the answer is no. So why do you do something like that? Why do you want your fees to be dependent upon the finding? If you think the findings are high and the fees are going to be high, on the first place, charge a high fee, no issues. If the client wants to come to you, they'll come, otherwise they'll find some other auditor. Right? So those things are very critical in our profession. Be definite, be clear. Do not give a scope for anyone to raise a finger against you. Because it is not just raised against you, it is raised against the entire profession. Right? And that is where the code of ethics comes into play. That they are here to protect the dignity of the entire profession, right? So they say when there is a doubtful situation, when there is a room for error, where there is a room for any biasness, right? Any unethical behavior, then why not cut that source on the first end? So they say that you're not at all supposed to charge any fees which is contingent on any profit, nor will you go ahead to charge your fees contingent on occurrence or non-occurrence of any event. Right? You're not supposed to do that. Not even on the results, any finding, nothing. Whatever it is, just give the breakup as per your out-of-pocket expenses, as per your charges and your time bank and everything, and then give out your bill that, yeah, this is what I'll be charging you. Right? There is a specific format for that. That you know this will be the breakup of my fees. So give that breakup and charge it reasonably, right? We are not telling you not to charge high fees. If the client is ready to pay, charge it, not a problem. But do not charge them in this manner. We are not trying to put a curve on your income or something, but just we are trying to make things more ethical. More ethical in doing it and more ethical in the way it looks or the way it is perceived that it's done. Right? But again, the last line says, except as permitted under any regulation made under this act. So we'll see what are the areas where it is specifically permitted and why it is permitted. Even that we'll discuss, right? But on the first front, right, what we basically need to understand after reading this entire text is that there's a difference between a business and a profession. Because business is basically done with a profit motive. At the end of the day, you want results, you want profit. However, you want profit, right? But when you're into a profession, right, there are a lot of things involved other than just profit. I know even everybody works for money, you need profit, but there are a lot other things more as compared to just profit. So obviously personal gain is one, but not the most important and the only motive in your profession, right? Therefore, the professional opinion that you give, right, the professional opinion, it frowns upon the method where the payment is actually contingent on something. In business it is, if you do not deliver on time, we'll reduce your payment. If you do this, we'll give you more money. If I get this quality of product, I'll give you more money. It is always like that. It is always contingent on something or the other, right? If you give me a better cut in the market, I'll give you more money. If I'm the only dealer, I'll give you more money. There are a lot of things in the business, but a profession is not just about money, right? Because in profession, what happens if you are doing a work where your fees is actually dependent upon the benefit that you give to the client, then what happens, you tend to give more benefit to the client. You exaggerate things and you become biased and unethical at the same time, right? So those proportions has to be cut. It does not depend upon what you're serving, the value, right? What benefits you're giving to the client. Obviously value, because you're an auditor, you're serving him. That's the audit that you're performing. You'll be giving your opinion, you'll be giving a report, right? That is the value you're giving. There's no other benefit that you should be giving him and then your fees should be contingent on those benefits. That is wrong, right? That is why this is called a profession. There's a dignity involved. I don't say businesses are unethical, no. But the point is, there is less of regulation. Everybody can be a businessman. There's lack of some regulation. When you are dealing one-to-one on a very small scale or somewhere like that, you do whatever. Nobody is watching you, nobody is guiding you, nobody is judging you. Nobody generalizes the entire business, right? But they'll generalize the entire profession. That CAs do this, CAs do that, right? And apart from that, it is not always about the outcome. That okay, if I'm providing a service and only if I come out with some concrete findings, right, that yeah, this is going to help you a lot, otherwise if you wouldn't have done it would be a problem. And so because if there is no finding, what do? It is not compulsory. I'll come out with a finding and then I'll say that okay, my fees will depend upon the finding, right? Any of such agreement and arrangement where no fees will be paid unless and until you find out something, that is not allowed, right? But fees should not be regarded as being contingent if it is fixed by any court or any public authority in that case. In that case, you will not say it's contingent, because obviously when you are in the court, the fees will depend upon what the court says, what is the outcome of the case, right? So in that case, we'll not say that it is contingent upon the working of the court. That is a separate issue altogether, because what we need to understand is the reason behind putting this clause. When the reason is simple, it's simple. When the case has gone to the court, it's not a reason behind it, right? It's the judgment of the court. It's the judgment of the judge, right? So on a lump sum basis, I think you are clear with what this clause wants to say and why, right? But basically, my dear friend, you do not get questioned directly on this point. The question comes on a tricky way, because there are some places where this restriction has been taken away. So we'll deal with that as well. No restriction in the following cases. Number one, in the case of a receiver or a liquidator. Now, when I was teaching you law, I also taught you a chapter, winding up, right? So in winding up, you came across the term liquidation, where the official liquidator or the provisional liquidator is allotted and then they dispose of all the assets, pays off all the preferential creditors and stuff. A lot of things happening over there, right? Let's not get into winding up again. But yeah, you remember over there I taught you a lot of things about that. So over here, what you basically need to understand when you relate to that chapter of winding up is that the fees of that liquidator is always based, is always contingent, or is always a percentage of the realization or the disbursement of the asset. It does not matter what the liquidator is doing over there day in, day out, it's working so many days, so many hours. No. What is it that you have realized, man? Take a fees, take a percentage of that. That is your percentage. And the rest distribute it. You know, right? The liquidator is also a preferential creditor over there. First of all, his fees has to be paid. And then the remaining goes on to the unsecured and a lot of things. Remember, right? So, over there, when you cannot say that, yeah, I'm sending a liquidator and I'll charge you 10 lakh rupees. No. If you are not able to realize assets, how do you pay the liquidator? The company itself is winding up. It is not always a voluntary winding up. It may be a winding up that is required by the creditors, winding up that is required by the court. That is because the company is being insolvent. The company is not able to perform. How is the company going to pay 10 lakh rupees? You're already into debt that you're not able to pay, and then we say, okay, you have to pay 10 lakh rupee more to the liquidator. No, that does not make sense, right? So the liquidator is appointed, and the liquidator is able to find out some ways of setting out those liabilities, setting aside those liabilities by paying them off. How? By selling off or disposing the assets. So if the liquidator is able to dispose of some assets, yeah, they'll keep some percentage and rest will be used to pay off the creditors. They dispose of another asset, they'll keep a percentage and dispose of rest. So in the case of a receiver, which is the case of an individual, and liquidator in the case of a company, right? They both have the same task to perform. So their fees will always be dependent or always be contingent on the amount of asset being disbursed or realized, right? So if you get that case, clause 10 will not be applicable. Clear with that? Don't confuse with it. Hey, I just read clause 10. Huh? It is against the profession. You cannot charge any fees as percentage of profit or percentage of realization, disbursement, any contingency. No, you cannot. Right? Don't get into that kind of a thought process. Just remember, in the case of receiver or liquidator, it is accepted. That is why instead of writing the entire statement, I have just written these two words so that it remains in your brain. Right? Next we have auditor of a cooperative society. So in case of a cooperative society, right, you must be aware that the fees over there for the auditor is again not fixed in the beginning. Oh, I'm coming to you for an audit, so that will be my fees. If you agree, let me come. No, it always will depend, right? There is a process of calculation of the fees for the auditors. It will always depend as a percentage of either the paid up share capital, a percentage of the working capital that they involve, right? Or if they have made some income, some profit, then it is on those gross or net income or profit. So it will always be defined that, okay, you are taking a fees as a percentage of profit. This is a profit, this will be your fees. This is their working capital, this will be your fees. This is their paid up share capital, this will be your fees. So it can be based on anything, depending upon the cooperative society and depending upon the engagement of that case, right? Not many of you will be aware of what happens in the case of cooperative society because we have not even discussed it earlier, right? Even in the case of law. So just do not get into the detail of how the fees are fixed for the cooperative society. Just understand that, yeah, in the case of cooperative society, it is actually fixed on the basis of your percentage of profit or the income, whether gross or net, or the working capital or the paid up share capital or anything like that. There's always a basis for that fees. Okay with that? The next one we have is a valuer. Now you know who a valuer is? A valuer is basically a person who values your assets, your properties or something like that. Basically in the case of taxes, right? Maybe direct taxes, any duty that is leviable or any kind of a thing. So in that case, you want your commodity to be valued. Whom do you approach? A valuer, right? A valuer may adopt any of his techniques to value the commodity or the unit. But when it values it, it will always charge its fees based on the value of the commodity. Right? Why? Because the valuer, when it gives you a value, on that value you apply the duties and taxes. So similarly, on that value you will also pay off the valuer. The valuer will not say, okay, you have this item, I don't know what the item is, I'll take 10 lakh rupees. And the entire value of the item is not more than 5 lakh rupees. So to value an item of 5 lakh rupee and pay a duty of somewhere around 30,000 rupee, you pay the valuer 10 lakh rupee. No. Or if the valuation is in 500 crores and the valuer says, I'll take 10 lakh rupees. Why? Take 1 CR, man. You're valuing a lot of things. You're valuing big asset. Right? So that is why the profession of a valuer is such that it will depend on what it is valuing, what is the value that it brings out. For chindi and small things, you cannot charge him a lot of money, right? And for very big, huge thing, you cannot do it for very cheap. So there always has to be a balance. And how will this balance be maintained? The balance will only be maintained if it is correlated. Clear? So these are basically the 3 places where the restrictions of clause 10 will not apply. Receiver or liquidator, valuer, or any auditor of the cooperative society. Right? Now there is one question that comes to the mind, and that can be a googly in your examination as a case study. You know what? I'll tell you what. But first you just know, yeah, these are 3 places where the clause 10 does not apply. Right? Because if we go back to the previous slide, it says, except as permitted under any regulation made under this act. So I just forgot to mention the regulation. It is regulation 192 that gives you these 3 exceptions. Right? What is the regulation? 192. Now there's again a question. Now you know that you have consultants, recovery consultants for the bank, where you have some non-performing assets, and these recovery consultants get those values from the non-performing assets recovered. Right? So basically we may confuse that, yeah, the work of these recovery consultants are also the same work as the liquidator or the receiver. When the company is liquidating, they help the company get the value for their assets. Right? So if there is a non-performing asset, then that was an asset for the bank, but now since it is not performing, like a liquidator, I'm getting it liquidated for you. That is what some people get into the general understanding. But the point is, we cannot accept it that way. They are not official. You cannot equate them with a receiver and a liquidator. A receiver and a liquidator are only some qualified people, high dignity people. But a recovery consultant can be anybody. Any Tom, Dick and Harry can be a recovery consultant. You cannot equate them to a liquidator, man. Come on. Right? So that is a confusion. That can be a googly. Because it's again, the kind of work is same. But since they are not receivers or liquidators and they are not mentioned anywhere in regulation 192, we will not consider them to be in their place. Right? And hence the charging of fees by those recovery consultant in the banking sector, which is based on the percentage of the non-performing asset that they get recovered, will not be allowed. They'll have to charge a fees, and that will be a fees monthly or yearly or quarterly paid to them. They cannot say, okay, we have got so many of your NPAs liquidated, or we have made so many NPAs as PAs, performing assets, so please give us this much money. No. If you are paid 50k per month, you will be paid 50k per month. Right? So that is basically what it is. Now before closing this lecture, right, we have almost done. We are done with the entire clause 10. It was a very small clause with just 2 lines to say, right? And the interpretation and the exceptions have already been discussed. Now the only one thing that I would still want to discuss before proceeding to the next lecture and the next clause is a case study. So I'll give you a case where we'll discuss all of these things, what we have already done, right? And give you a little more clarification on those topics. So what happened is basically a chartered accountant, right? He went ahead to get a loan sanctioned worth rupees X amount, maybe 1 CR, from the commercial bank, right? And when the loan was sanctioned, he raised his bill for his payment as 2% of the total amount of loan sanctioned. Right? So what do you think? Is it allowed? It is not allowed. It is not allowed, right? Because we said your fees will not be based on the results. It will not be based on any future events. It will not be based on the percentage of profit. It will not be based on your findings, right? So this is a result. If you went out with a work, you applied for 2 crores, but the loan that got sanctioned was 1 CR. So you'll say, okay, 2% of 1 CR is what you give me, because that is the result of the work I have performed, right? So you'll not do that. As per clause 10 says how you go ahead to write the answer if you get this, that as per clause 10, you're not supposed to charge this. You'll write the entire clause 10, right? Write the text. And then you say that as per regulation 192, there are certain things that has been exempt, right? If you remember the 3-4 things, receiver, liquidator, cooperative society, auditor, valuer, mention it. Even if you don't, then just write that this case or a CA who gets the loan sanctioned will not be covered under the exemption under the regulation 192. Hence, he will be deemed to be guilty of professional misconduct. Right? Because earlier we talked about the percentage fees, we talked about the findings, but we did not talk about the results specifically. So I parked that portion of your discussion for this case study. And now it's clear, I guess. Okay? So with this, we come to the end of the clause number 10. And in the next lecture, we'll start and begin with the clause number 11 and then clause number 12, and we'll be done. Right? So, and one more thing, if you people have any queries, right, related to this specific clause, post only those queries in the comments. In the previous, I have experienced queries coming out from some different topic or from some other places, right, on a video. So understand, it becomes really difficult for me to answer those queries, because maybe I have already replied to those queries or I have already taken up that topic in some other lecture. Right? So again, typing it down in your comments below becomes a task. So follow the lectures completely. If you have any query, if there's something you do not understand in this lecture itself, then go ahead. And second thing is, do not go ahead to expand it unnecessarily, because I've again had questions which were not very relevant, right? Like over here, if you ask me to explain you the entire cooperative society's auditor's role and everything and how things happen, then that is actually not very relevant for you. Because in that case, you get on to lot of questions. You can have a number of questions on this topic as well. So please try avoiding those kinds of questions. But what I have taught, if there is a confusion in that, please let me know, and I'll get back to you for that. Right? So with this, we come to the end of the lecture. Thank you so much, and I'll see you back in the next lecture. Until then, just take care. Thank you. Bye-bye.